If you are a salaried employee, this number matters to you. 8.25%. That's the interest rate your Provident Fund will earn for the financial year 2025-26. The Employees Provident Fund Organisation, or EPFO, has recommended keeping the rate unchanged at 8.25% for its over 7.8 crore contributing subscribers. This is the third consecutive year that the EPF interest rate has remained at 8.25%. So what does that mean for your retirement savings? The EPFO's apex decision-making body, the Central Board of Trustees, took this call at its meeting on 2nd March. The board is headed by Union Labour and Employment Minister Mansukh Mandavia. This recommendation will now be sent to the Ministry of Finance for ratification. Only after the Finance Ministry approves will the interest be officially notified and credited to subscriber accounts. That is the standard process. EPFO announces the rate only after government ratification. The 8.25% rate was first announced in 2024 for FY23-24, up from 8.15% in FY2022-23. In March 2022, EPFO had cut the rate to 8.10% for FY2021-2022. That was the lowest in more than 4 decades. EPFO's returns are linked to government bond yields and equity market performance. There are concerns about possible volatility in financial markets. Keeping the rate steady signals stability. However, reports suggest that maintaining the 8.25% rate could lead to an estimated shortfall of about 650 crore rupees. This is expected to be adjusted against last year's surplus of around 5,300 crore rupees. EPFO manages a massive corpus, over 28 lakh crore rupees. It invests 45 to 65% in government securities, 20 to 45% in other debt instruments, 5 to 15% in equities through exchange-traded funds, and up to 5% in short-term debt. This structure prioritizes safety while aiming for reasonable returns. That is why EPF remains one of the most trusted retirement savings instruments for salaried individuals. If you have 5 lakh rupees in your EPF account, an 8.25% return means roughly 41,250 rupees in annual interest. This depends on monthly balances and fresh contributions. And remember, EPF interest compounds annually over 15 to 20 years. Compounding makes a significant difference to your final retirement corpus. In a world where fixed deposit rates change often and markets swing sharply, your EPF remains a government-backed, relatively stable retirement tool. So, at 8.25%, it remains one of the more attractive debt-based options for salaried employees. Follow for more stories.